interaction along expected lines. You would have expected a disappointing listing for SBI Cards at a time when the Nifty itself is down about 500, 600 odd points or so. No respite really, as I see on my screens. We are still languishing. We're still down about 5% for the Nifty futures. All sectors bleeding. Yes Bank, Glenmark, Idea, HPCL, and maybe to some degree Cadilla being the only exceptions to this list of losers. Innocent Bank, Adani Ports, Piramal Enterprises, Muthoot, Equitas, what have you, they're all down and out, and the blue chips are caving in as well. Lakshmi Iyer joins in to chat more about what she's making of the market. Lakshmi, hi, morning. Doesn't seem like we're far away from the fear and paranoia playing out in the market, and clearly it seems to be now just protect capital, book your profits on whatever you've made money on so far.
Is this the right market to book profits? Well, the answer, at least to our mind, seems to be in the negative, because when there is heightened fear and there's heightened paranoia, the markets don't really reflect the true potential, or for that matter, any asset class, and that would include gold also. So I think these are markets to just basically lie low and I would say do some bit of market distancing, try to just keep calm, and that's very, very critical, not only to keep away viruses, but also to keep away the mind thinking in that kind of a direction. It's very, very important, because the natural tendency is to get flowed away or by what we are seeing around us, and that may not be the optimal decision to take in these kind of markets.
Absolutely. So what is the message to Lakshmi, to investors right now? Because many believe that this is the kind of panic which should be bought. What is the sound advice that you would give to people who are looking at investing in debt, for instance, right now?
So clearly we are seeing a global risk-off sentiment, and the recent development of the US actually easing rates by 100 basis points to 0 is very, very unprecedented. This obviously will have a positive fallout on bond yields across the world, and India will be no exception. So therefore, in times like these, and we have seen paranoia in the bond markets also, by the way, we have seen high grade or the blue chip equivalents yields also go up by almost 100 basis points. On the corporate bond side, government bond yields haven't come down the pace at which they should have come down. So these we clearly believe are fantastic entry opportunities from an yield perspective. Keep your investment horizon in mind. These are not times to take tactical bets, and if you do that, take it with the own repercussions well known. But clearly, to every debt investor, today is an entry opportunity. There is no doubt in our mind with respect to that.
Lakshmi, historically, when we have seen moments like these, central bankers have always come out to rescue, and they've always changed the market. Now today markets are getting nervous because central bankers have acted, and generally the view is that central bankers don't have the ammunition and the firepower. So if that is the underlying thought, where markets do not even want to believe what Fed is doing, so I wonder what the backstop is going to be.
See, Nikunj, we are in unprecedented times which require unprecedented actions. US cutting rates by 100 basis points, not even waiting for 3 days. 17th, 18th was the official announcement for the Fed to meet. So that's clearly telling you that they want to be slightly more proactive rather than being reactive, contrary to some behaviors which are inexplicable by the central bank. Therefore, we believe that coordinated efforts by central bankers are actually living the maxim better safe than sorry. And if you notice across the world, including the US, it's not just rate cuts, it's also liquidity. So it's a combination of all of these factors, not just moral suasion, and telling the markets that, look, growth is our priority. We understand, if you look at the MSCI World Index, they're actually trading at 10-year average lows. That's clearly telling you that there will be pain points in terms of growth. So here is a central banker coming out in the open and across the world telling you that, look, growth will not be an issue. And therefore, we believe that something similar should be indicated by our central banker also on or before 3rd of April. 3rd is when we officially meet.
Lakshmi, for an outsider, the first impression is that we've not heard anything from government. All we've heard it from the CEA and perhaps from the ministry. The following, that decline in crude prices is great news. When fuel prices have come down, government has actually increased excise duty, and then after that they say that we are committed to sell BPCL when they themselves are not honoring the entire fuel deregulation. So in terms of messaging, do you think our administration and government has not done anything like others have done?
See, two things we need to bear in mind is that when there is a global risk off, one is there is an accelerated sell pedal on every EM emerging market, and India is therefore no exception, point number one. And therefore, we see FPIs, which is the external world, actually having sold almost 45,000 crores worth of equities plus bonds, and we're just halfway through the month. The good news is obviously the domestic investors are buying. But the second most important thing is, which is, the coronavirus issue is actually an imported issue for India, though we are obviously reeling under the pressure of that. Therefore, I think appropriate messaging and timely messaging is what the markets will focus towards, and not really rushing in a panic sort of a mode. The rest of the world panicking is natural because we've already seen the holistic impact of it. We're not saying that we need to be complacent, but I think we've already seen the central banker announce dollar liquidity, and to neutralize the rupee impact, we've seen variable repo being announced. We remain confident that you will see a slew of measures being announced by the central banker, as I said, on or before 3rd of April. But panicking and trying to jump the gun may not be the right kind of messaging that we would really want to send across as a nation.
Central bank action, the latest on your screens. The Bank of Japan has taken additional easing action. They've introduced a new lending program and will increase ETF buying from the current 6 trillion yen per year. But Lakshmi, if I may deviate a tad and talk about the entire scenario around Yes Bank and the 81 bonds being written off, do you think that due to that we could see some risk aversion return to the credit markets despite the kind of liquidity measures that have been adopted by the Reserve Bank?
We have already started seeing risk aversion on the credit side, and by the way, it is not just non-AAA bonds which are reeling under this pain point. It is also the high-grade bonds. To give you some cases in point, the 2 to 3 year segment of high grades, the large cap equivalents of fixed income, have actually seen their yields go upwards of 75 to 100 basis points in response to what we are seeing. And therefore the need of the hour, and of course I don't really need to mention about the large caps and the small caps of the bond markets. It's therefore essential that we need some sort of a confidence building measure and some sort of a liquidity window to be made available at an appropriate time, so that this sentiment doesn't snowball into something which we probably cannot retrieve. The bond market, specifically on the credit side, had actually started seeing signs of normalcy, while I will not say 100%, but certainly they had more than limped back to normalcy, and the last 10 days have kind of undone a good bit of it. So we really require as a bond market to see some solid confidence building measures to ensure that the snowballing impact does not jeopardize the good job that we've done in the last 15 to 18 months.
For joining in and sharing with us your outlook. A little bit of a view on the overall credit markets as well as the macros. As of now, Lakshmi is saying not only social distancing, but even market distancing would be the call of the day. As things stand, 32,437 on the Sensex. You've got the Nifty quoting at 94.95. Names like Adani Ports, Indocent, Piramal Enterprises, HDFC, DLF, SBI and Vedanta continue to languish in trade. Let's slip into a very quick break. Be back with lots more on First Trades.